the value of what you are offering. You make them taste it, and then they are willing to pay you for that. They themselves don't know the value initially. So with these two exceptions, I don't think there is any logic to have a negative gross margin, right? So if your gross margin is healthy and below that you are investing for growth, that is okay. I mean, that is why we are here, right? We are providing that capital for that growth investment only.
True.
But that is also a question: what kind of LTVs, CACs are you not generating artificial demand, right? Let's say something is 100 rupees, the marginal utility is 80.
Yeah.
You start selling it at 70, everybody will buy it.
True.
But the moment you go to 85, nobody is going to buy it, right?
Exactly.
So you need to be cognizant of those facts. As long as you are managing those parameters properly, I think you are doing fine.
Perfect. Thanks. And then that's exactly the X pricing, the thing we have spoken about. That if you price it too low, and that was happening with so many startups we worked with, it becomes, a revolution even for them. Oh,
Yeah.
so people is buying, because I'm cheaper, or they need it, right? So you start getting the honest answers, right? So
Yeah, that's what we call artificial demand.
artificial demand, exactly, exactly. Thanks, Amit. Anjani, next question to you. So since you have seen a lot of global startup ecosystems, right? Tokyo here, and then NOU and then US. Number one, what is the difference you see in them? Number two, and this is more true for tech and not the consumer startups. And no, I have a column. No, it's not. It's, it's yeah. So. Okay. Yeah, I think it's on the wrong side in that sense. So, in that sense, Anjani, thank you. Yeah. Um, so, okay, they let me forget my question, but let me come back to that. So, my question was: you have seen the global startup ecosystems, right? What is the difference between Indian startup ecosystem versus them, right? And how important do you feel for Indian startups, especially the tagged ones, SaaS ones, to go international? Amit has spoken about building in India for the world, right? How much you believe in that? Obviously, agri-tech, etc., has to be more localized in that sense, right? But what is your view on these two aspects?
See, I think first of all, yeah, like you rightly said, the startup ecosystems vary quite a bit in different countries. Just to give you some idea, if you take Japan, the median IPO valuation is anywhere between 40 to 150 million dollars. So companies go public very early in Japan. Sometimes about after just one or two rounds of funding, they are listed. It has its pros and cons. The advantage is, of course, that as a company, you will get listed very quickly. So you inherently build maturity in terms of your operations, your governance systems, and how you are building the company from day one. The negative side of it is also that the outcomes for VC funds are much muted. Whereas in India, what we are seeing, and that also shows up in the number of unicorns. If you look at in Japan, there are probably 10. In India, it's 60. China 300. US 700. But in India, the advantage we have is the size of the markets that the startups can build for is significantly larger than Japan. And that brings me to your second question, that in terms of, do startups here necessarily need to go outside? See, it's a tricky question because, one, yes, in India we have a very large and growing market, so you can build large companies. Don't necessarily have to distract yourself by thinking about expanding into other geographies early on when you're constrained by resources, both human resources and capital. But at the same time, what we have also seen, particularly for technology-led companies, it's also not avoidable. Because when we as a global fund are looking at companies coming out of research institutes like this or other great ones in India, we often try to benchmark those technologies with what we see in Japan or US. And these technologies need to stand up to that measurement, because for
True.
us as a global fund, that's a question. Why should I invest in this particular AI technology operating in India when I can invest in the same technology in US, where
Exactly.
the returns are much higher? And the answer to that question becomes yes, only when I can justify that on a technology benchmarking, it is as competitive as its counterparts in any other country out there. So that's where also I see an opportunity for Indian startups to do better. Right now, I often come across this hypothesis from founders that look, we are building the jugaad.
Yeah.
We are building low cost technology for Indian market, and I personally don't buy into that as a principle. In some isolated cases, it may make sense, but I think as a core principle of what standards we should aspire for, we can probably aim higher.
No, absolutely. So, Anjani, you touched upon something which I am saying for like I don't know how many years. I hate this word jugaad, and then again I'm saying in a public forum. I literally hate this word jugaad. This is killing anything meaningful you can build, right? You just do some jugaad, get solved for a couple of years, then you're dead, right? And that's why not many great products could able to come from India. And I'm just saying it in all honesty, right? So don't focus on jugaad means. I always say go after perfection, right? It may take time and it may be too hard initially, but the dividends or the returns, right, on a long term will be multifold, right? And then not only for you, but the entire ecosystem, the entire culture that will create around that will be very different.
Tesla is the greatest example. Like he didn't do jugaad for electric vehicles, and today it's the I think Nvidia second. I think
Nvidia is
it's the second most valued company
yeah,
on stock market.
yeah, Nvidia
So
absolutely.
Tesla did not do any jugaad.
It's even Nvidia. So Nvidia, if you heard, Jensen any time on his interview, he simply said that we have chosen a very hard problem to solve. We did not even knew that we'll be able to solve it, but we continued to try and we could able to solve after a while. So, so what happens is here we start solving the easy problems, right? So easy problems are easy to solve, but then it's easy for everyone else. Please understand, right? Someone will solve it one way or another, very next day or very next week or very next month, if they see the traction, right? So once you solve a hard problem, right, then you get that moat as well. Okay, so I won't go on that. So Rajat, back to you. So I had a actually follow up question on what you were saying, right? And then it is one is what is your view on for next 5 to 10 years for Indian venture capital? And where the very specific thing I want to touch upon is still a lot of money that has been invested in startups routed through VC fund. Close to 85% is international capital, right? 15% is only domestic pool, right? Now, do you think it's sustainable? Do you think it should change, and what we should do to change it?
Multiple questions, but I was waiting when you talked about jugaad. If that was the theme, maybe let's also continue a bit on it.
Yeah.
Because I think I don't know how much time we have, but very importantly, I just wanted to leave one of the very important messages also. Even when you say there's no jugaad in making your products, there is no jugaad in governance also. As we all talked about Byju's yesterday, if you saw the so we don't want something like that, right? So and it's a responsibility of the startups as well as the fund managers. As I say fund managers as well, because fund managers are today getting money from investors and even the government. Today if it's a sunrise sector, which the finance minister announced, and we put a paper for saying, look, these are the 5 sunrise sectors, please put in money into that. The SIDBI fund of funds is a 10,000 crore funds, right? MSME fund of funds. Now, fund managers should not keep jumping, getting A, B, and C, from all these places and rerouting and saying, acha startup, up to MSME ka branding le lo, phir wahan se. So, these are some of the things which we have to be very careful about, right? Even the fund managers today, we are making sure that they get themselves educated with doing a course, which is a certification course, just like in the technology world, if you had a Cisco certification, it's great, you could sell anything. AIFs today have to take a certification from NISM. So it's made compulsory now by SEBI. So it's something we're saying they are doing their part, right? So they are behaving well, they are transparent with the investors. Similarly, the startups who are building products should not forget about their financials, right? Your intent should be perfect, right? And that should be displayed. You should be transparent with your investors, right? And I think that's extremely important, because if you don't have their trust, and if your intent is, somewhere else, you're just doing the jugaad, and we'll all go down, together. So let's not do that, and let's work. So coming to your question of, the 85-15 rule, I think we are also kind of chasing the. I mean, our honorable Prime Minister, we had made sure that he announced opening of pension funds insurance, 5% and 3% for life insurance to be invested in this asset class.
Yeah.
Um, Now, as we still say, they're still not confident. Right? We saw RBI pulling up the plug from these guys where RBI was putting in money to them. Right? So they pulled up the plug saying, look, we won't give you if there's evergreening happening.
Yeah.
So I think certain things we have to just make sure, because as our look, they were flipping of startups, right?
Yeah.
There were talks of flipping of funds because taxation issues, but again, all that's passe. We have to ensure that our founders don't flip up, right? Because
Yeah.
they have to stay here. This is our IPR, and that is to make sure that happens. I think not only just the investment pools which are with the government, but our local ultra high net worth individuals, your HNIs should be looking at this asset class as something which is building the future for this country. So please invest here, trust in them as they build their trusts up. So, I mean, I'm happy to add more if you.
No, thanks, Etan. I think in interest of time, I think we want to take some audience question as well. Though we are on top of the time, but few audience questions are welcome. Anyone who has question for any of the panelists, or me, happy to answer.
Hi, my name is Anurag. Just wanted to ask a simple question. Given what has happened to Go Mechanic and Byju's in the recent past, governance has become quite important for every startup and for VCs also. There are international standards like the ISS for governance. How do we intend to implement them here in India for Indian startups?
Rajat, you want to
Yeah,
take that?
I'll just start it. I'll just tell you, as one of the initiatives, while the association, we do not work with the startups directly. We only work with our fund managers who work with their founders. We did a report with a governance report which was launched, and startups were put into the room so that all different stages of startups, defined what you're expected to do. This is how you're reporting. This is how, if you're taking somebody's money, this is the reporting format, and this is how you come prepared for your board meetings. These are your deliverables. So at different stages of startups, we've made sure that's done. We also did a governance course with the ISB school. So in terms of, they also launched a program which was on premises program which was attended by founders as well as fund managers. There is a board level training as well which takes place in the country, so that the fund managers are also educated in that. So I think as we grow, I mean, we are, if I would look at it, only a decade old. The US and the Canadians have been like 3 decades old. The practices, best global practices are coming in, and as we scale up, I think we will be on the path of truthfulness, and certainly all the standards will be adapted. Even for governance, etc. Even for fund level governance, there are ILPA standards which we communicated to SEBI, and SEBI has adopted that, right, on valuations, etc. So there are certain learnings globally which we're getting, and slowly and steadily we will be there. I mean, anybody else wants to?
Yeah, Anjani or Amit, you want to take a shot at that? Governance at the startup.
Just add one point to what Rajat said. See, I think having said that, to every Byju's and Go Mechanic, there is also a Theranos and FTX.
Yeah.
So I think at the end of the day, what we as an investors are, at least us, are trying to do is that we also want to be a bit more proactive in our role, in whether it's in the board meetings or our check-ins with the founders. And honestly, in the past, when there were certain issues, whether it's about revenue recognition that we talked about earlier or other practices, that we would not pay too much attention to. But now we don't want to ignore those early signals. And we also want to double down, make sure we understand what's happening so that we can prevent the problem from escalating. I was reading this book written by one of the Indian nuclear scientists based in Princeton, and he was talking about how do you prevent a nuclear accident, and it's by making sure every switch in your nuclear facility works. That's where the problems start, not a meltdown in the reactor.
Yeah, I think Rajat and Anjani covered most of it. Just a couple of things. I think from a fund perspective, also, it's very important to do our homework in terms of what we are looking at. The discipline while doing the evaluation on a deal is very critical to check about the founder. Of course, you can't predict the future, but there might be indications from the past. Uh, so that is one. The second thing, I think founders are not the only ones to blame sometimes. Uh, if we end up giving much higher valuation, it's a treadmill the founder has to run on, and his willingness to or the pressure to start doing things which probably wouldn't have done if the valuation was reasonable increases. It's complex problem, but every party need to kind of be constructive in resolving that.
So maybe I'll just add to that. There's something which is saying, look, India has seen a lot of, like you said, Japan only 10 unicorns. We had 110 plus, 120 plus unicorns. Our focus should not be on building, unicorns, but I think let's start focus on building performicons, and that means deliver growth, deliver money, all that together. So the terminology may needs to be changed, and I think I've used it in a couple of places. Let's build performicons from now on.
No, absolutely. I think chasing just the revenue number is creating a undue, I would say, pressure, number one, or environment where revenue is the prime focus, right? If we start building the data positive business as we were doing like 20 years back in India, I think some of this will get eliminated to an extent, not fully. I think it also falls into the domain of intent and so on and so forth. But absolutely what Rajat, Anjani, and Amit said has absolutely, I resonate with that.
We do see businesses which are good businesses. We do see businesses with good founders, which are good businesses. But then the founders stop talking about building the business. They start talking about building valuation. So that becomes a problem.
Completely agree. Thanks, all of you. Yeah. It's on.
So, yeah, my name is Sanjay Diwan. I'm partner in QHS Series Consultants. The answer to your particular question regarding governance, what I suggest is that look at ISO 37000, which is International Organization for Standardization. It is giving you guidance and principles for good governance. It's also ISO TC 308. You could also try that. If companies could implement that, then I think a lot of problems could be solved.
Thanks for the inputs.
So,
Yeah.
one line answer.
Thanks. I think there is a. Can you pass the mic there? Yeah.
Hi. Thank you for the insightful panel. I wanted to get your views on enterprise AI. What sort of risks do you guys see? What sort of future do you see opportunities therein?
Anjani, Amit.
Yeah. See, I think it's very promising area in general. But as you know very well, enterprise area AI, enterprise SaaS is also a very wide sector. Depends on specifically what you're building for. But today, with certain key technological changes, whether it is in case of financial services, generally in case of AI, which is affecting financial services or healthcare, there is a clear and strong demand for enterprises to identify new tools that can replace the existing products that they have, or at least that can help them understand how best they can utilize these emerging technologies within their businesses, which, as you know, hasn't happened yet. While a lot of money has gone into building the infrastructure for AI, it hasn't really translated into revenues for enterprises. So, on that particular point, there is a lot of demand for enterprises, in enterprises, for tools that can show that revenue generation capability of these new tools. So new SaaS products that can demonstrate that more credibly have a clear demand out there. Now, at the same time, there is, because of the evolution of SaaS in India, there is every enterprise has a lot of choices for one solution, for one problem that they're trying to solve. So the competition in this market remains very high. It's getting even more competitive. Sales cycles are long. So the startups which are building in this field need to have a much more defined value proposition than they had maybe 2 years ago, because the technology is moving at such a rapid pace. So those are just a couple of points to keep in mind. But as a sector, it remains very promising and growing in India, definitely.
Just one simple point. AI is a tool, right? Effectively, a strong one, a disruptive one, but effectively a tool. So the most critical factor, at least in our view, is what are the use cases. If there are strong use cases for which the market is mature or is accepting it to some extent, there is case to make an investment. Just I mean, the thing is, AI is currently probably the most abused word, right?
Absolutely.
Almost every business is AI. So as long as the use case is there and you are using the technology well, that is most critical, I think, in my view at least.
I mean, just to let you know, adding a real life example, we just introduced a small training session at the association. We are less number of members there on communication, and exactly the AI tool was the person who was just the trainer. I used the AI tool and actually generated very simple formats for the entire team at the association, saying, look, how do you communicate your standard way of communication, your new way of communication with the government, with the member, where you are seeking sponsorship money. So it was beautifully crafted in 1.5 hours. The simplicity with which AI, bought out, and it actually is kind of helped 10-15% our internal, matrices on performance is certainly got better. So yeah, it's a use case which really makes the difference.
For us, one clear use case that we are looking at very closely is in healthcare, personal medicine. I think there is, and drug discovery. I think there is a huge opportunity there to reduce the cycle or the time it takes to identify new drugs. Currently, it could take anywhere up to 10 years for a new drug to clear all the clinical trials. We think that can be shrunk significantly with the use of AI.
Yeah, I mean, it's a horizontal. We keep seeing different use cases, so it's based on the market size for that particular. Even existing SaaS companies, we are seeing that incrementally experimenting with AI. It's picking up, but it's not there yet, to be honest, from an Indian perspective. But it's more relevant for more process-oriented stuff where that learning can be useful. So.
Thanks, Sumit. So I'm very cognizant of the time of everyone. I know there are quite a few questions, but we are running little late. Not little late, quite a bit late, I think. If panelists, I think you suggest, shall we take one more question and then before wrap up, or shall we? I know Rajat, you have to.
I mean, let's be justice, do justice the next panel.
Yeah.
It should not
No,
be-
correct. No, I think let's.
So,
So I
can
think
I ask Rajat just one last question?
Yes,
I'm
please.
Gajendra here. You mentioned something about SEBI. Just want to understand, it's again on the valuations. Are there certain specific self-regulatory mechanisms or standards that you're suggesting?
ILPA guidelines are there, so I think they are being looked at, and SEBI is put out a certain circular, which we formed a working group at the association with some of the members, and we're working with them on that front as well. Because I think this is the buzzword, which is not only with SEBI but with all the regulators. So we've tried to explain the art, but it's like a craft right now for us.
Yeah. Thanks. I think we will conclude the panel here in interest of time. I think just wait for a minute. I will request team to bring the mementos to facilitate the panelist.
Thank you, panel members, for your valuable insight. Let's hear it for our fantastic PhD panel. I request the panelists to stay back and request Neeraj to present a vote of thanks for our panel members. Neeraj, please come. Raja Tandon.
Thank you very much.
Next, we have Anjani Bansal. We have Amit Sharma now. Please give him a round of applause.
I'll suggest a group photograph if everyone can come to the front.